Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, April 21st, 2021. It is almost 1 o'clock p.m. as I'm starting the video. I have two appointments this afternoon, so I'll be away from my desk after this. So what I'm gonna do, I wanted to do the video, and I will do the video on commodities, but I'm gonna just start out with an update on the broad markets, so I can kill two birds with one stone. Nothing new to report. This is the level I've been talking about for last week or so. 4100 S&P 500 futures need to break. This is ES 60-minute chart of the S&P 500 futures, and so far, successful test yesterday, and I still believe that level will get taken out based on the indicators, and if and when it does, that'll be the next sell signal and open the door for move down to the next targets that you can see on the chart here, at least that 40.55 level, and quite likely that 39.75. So far, we have started moving down over the divergent high, but that doesn't guarantee a top. Again, I want to see a sell signal, and that is that break of 4100. Look at NASDAQ 100 futures NQ. The level I was watching there was 13.772. We did break it yesterday, but as I said, and this is a great example why I always look at both the S&P 500 and NASDAQ 100. I need to see them both break down, because if one breaks down and the other doesn't, and the other holds support and rallies off there, that's what you get. You get whipsaw signals. So we did break it, but we regained it. Why? Because at the same time NQ broke down, the ES contract, the S&P 500s, hit support and bounced. That's that simple. And to be expected, the initial tag of a support level often produces a reaction, but I do believe this is where we're going. We had breakdown, and again, so if you want to keep it safe, increase the odds if you're planning to short, or if you want to add to shorts or get out of longs, a break below yesterday's lows pretty much on both of them should do the trick. Again, 4100 I think it is on ES, whatever I just said, and this level there. Now this, to me, again, we've had divergence building, and that's why I'm favoring that scenario. A move to at least that 13,540-ish level there on NQ, and quite likely this is my preferred swing zone, this support resistance zone. That was our last buy signal in the market when we broke out right here on the breakout. Gave us this rally here that followed a divergent low, and so this is simple stuff: divergent low, divergent high. And I just want to say this: this right here, this action right now following that divergent high, to me just appears no different from this little kickback rally right here. See that? You had a divergent high, you started to correct, you hit support or a little slight undercut of it there, you bounce, and so I believe this is just a counter trend rally. And although we don't have the sell signals in ES, I'm going to go ahead and say this: I can't make a strong case to short it here, but I like it. I think it's objective to short based on the evidence in the chart. And again, call it gut feel, intuition. I think we're going to move down. So by being able to short when you're up like today, you're getting a better entry price than if you wait for a break of those lows. And also by doing so, you can have a stop relatively tight. If this over the last few days is just this, then again, we shouldn't be going much higher, so you could have a relatively tight stop. Again, it would be an aggressive short entry or add-on, but in the safe play, if that's your thing, is to wait for a break of the recent lows from yesterday there. All right, that's the market. Let's move on to commodities. And what I'm going to do for you guys, other than this first chart, I'm just going to do an update on natural gas futures. Everything else will be the ETFs and ETNs that track the commodities, because I do know a lot of you out there don't trade commodities, understand that. They're a little more sophisticated than stocks or ETFs and ETNs. They also require larger capital requirements. They're pretty heavily leveraged contracts for the most part. And trying to find NQ, bear with me, or NG, I'm sorry. There it is, NG. There's that pullback to the trend line. I talked about it here. It was a long trade idea here off the divergent low. We went up, hit this 2741 target yesterday. Mentioned pull back to the trend line and or that 2675 former target, which was already hit, would be that support. It's dual support, so that provided us an objective long entry with a stop somewhat below, or a re-entry I should say, for those that booked profits there yesterday. That's what I did, recycled back in, and that's that. So I just wanted to point out and this is the uptrend line to watch right now. There it is, uptrend line and price support, so stops can be just under there. And next target, if we can take out the yesterday's highs, then that should open the door for move up to my 292 next swing target there. And we're going to get to this chart in UNG in just a second here. In fact, let's roll into commodities. What I'm going to do at this time around is I'm going to start out on the weekly charts and then go back over my watch list of commodities on the daily charts. The weekly charts are going to paint the bigger picture. I've been clearly, very bullish on commodities as a longer-term investments, trend trade, bottoming trades. I believe that we are in early stage bull market action. Commodities have been in a vicious bear market for many years. And I've made the case both fundamentally from a valuation basis, talking about, the world's only getting bigger and bigger, more people with less arable land. So, if you think 10, 20 years from now, wheat's going to be any cheaper than today, and corn and soybeans and all that, and copper and, industrial metals, great. I don't think they will be. And also made the case repeatedly for the inflation trade that I think is in play. And so again, this paints the long-term picture. Then I'm going to drill down to the daily charts, and that'll give you kind of near term for more, this is your, let's say, strategic positioning. If you're investing, you're supplementing a portfolio with some commodities for asset allocation, which is a big thing. Have your money in different asset classes, a certain amount in stocks, a certain amount in bonds, if or whatever that is, whether bonds, they're not my big, at this point in time, I'm kind of going all over the place. I happen to be long bonds, but I'm longer term bearish bonds, near term bullish. And that's how the asset allocation pie looks. Everybody's different. More aggressive you are, the more stocks you have, the more conservative, the more bonds. But I think get commodities, gold, precious metal, real estate, those are different asset classes. And over time, these percentages you might have change, and that's your, for more of an investor. But an active trader, when I get to the daily charts, that's our tactical, entries and exits, swing trading, if you will, or positioning, adding or subtracting to your commodity positions in a longer term account as well. Like gold, like we got out of gold a few months back, sidestepped the correction, just recently started scaling back in as a long-term position. Okay, so what we're going to look at here, I'm going to start out with just a few individual commodity ETFs. So if you don't want to listen to the next 20 minutes of this video, and you just want, and you're not an active trader and you don't want to manage a lot of positions, these are for you. These are your call them one size fits all or diversified commodity ETFs that I'm about to cover here. Okay, first up is DJP, and that is the iPath Dow Jones USB Commodity Index Total Return ETN. What I've done here, and I've updated a lot of my lists, very, very important to know what you're trading. All commodity ETFs and ETNs are not the same. Some have a very high weighting in energy stocks and crude oil. Some don't. Some are more weighted toward ag commodities. And so I think it's important to know what you're trading. You can go to that company's website, a quick Google search of any symbol, and then if you put in DJP and then ETN after that, it'll bring you to the company's website, and that's where I get this information. So this one, for example, you have about 17% in oil, and that's between WTI crude and Brent crude right there. And then you also have natural gas at about almost 8%. So there's a pretty good chunk in the energy sector, and you can see, I think you can see here, if not, I'll rattle it off. Gold's the biggest individual commodity. Again, when you add WTI crude, that's West Texas Intermediate crude with Brent crude, that then gives you a bigger weighting than gold. So it's a little deceptive when you quickly look at their holdings, think, oh, gold's the top holding. No, crude oil is. Okay, so then in UK, crude oil, natural gas, corn is about 5.8%, soybeans 5.6%, copper, aluminum, you can see go down the line. So you are diversified, but again, you're pretty top heavy into crude oil and energy overall if you add in natural gas. All right, so let's look at the charts. What do I have here? Primary downtrend line, and we also have a move over the previous reaction low. Remember, the common theme here is commodities have been for many years in a bear market. Even after the last bull market started in the stock market, we still had commodities going down, and commodities often move in line with the stock market, but that hasn't been the case for many years now. And here is some sideways trading, but we continued. And a downtrend is simply defined as a security making a series of lower highs and lower lows. But what we've done most recently in a lot of commodities, almost all of them, is taken out the previous highs, reaction highs, and I'll get to a couple others in a second. Now, crude oil is really been down, and that's keeping some of these commodity ETNs down when you look at the long-term charts because of their weighting in crude. We'll get to oil in here in a little bit, but I just wanted to mention this. There was a breakout above the downtrend line. That's bullish. That's your primary bear market downtrend line broken out right here. And then we took out this pretty big 23, 24-ish resistance level, and we back tested it and successfully and moved higher. A breakout above 25.88, we can call it 26 if you want to round off, would be very bullish, because that will have taken out this multi-year sideways trading range right there. You can see that trading range. When we broke down below it, we've set up in another trading range, which we've just recently broken above. And again, that's bullish. So I see, longer term, nothing but bullish price action here. Are commodities getting overbought? Yes, just like the stock market, they are quite overbought. In a bear market, overbought readings, that's usually it, and you get your next leg down once you become overbought, like you did right here. There was your next leg down. You got overbought here, followed by another leg down. However, in a bull market, overbought tends to become more overbought. Go much above that 70 level, or stay overbought for quite a period of time. So it's not the hard, if you will, sell signal it is during a bear market. And so it's, depends on your view. Maybe I'll be proved to be wrong that we're in early bull market action, but as of now, I see a lot of evidence in the charts and fundamentally a case that I can make that we are. Therefore, I'll acknowledge the overbought readings. Not the best time to be loading up on commodities if you don't already have them. Again, but you can manage your positions. I'll get to the daily charts in just a second. Let's move on a little faster here. GSG. This one is the iShares S&P GSCI Commodity Index Trust ETF. That's the full name of it. Whole mouthful there. And again, you can go to the company's website and see what their index is all about. Each commodity index is not the same. This one has, this is a very top heavy into energy right here, about 54% energy. Only about 20.5, about call it 20% in agricultural commodities, 12% in industrial metals. There's livestock, not sure why they didn't wrap that in. I got it from the company's website, 7.4%. That figure that would be in agricultural, and then precious metals 5.4. So again, very important to know, what your ETFs are made up of, because if you're a gold bug, or you're long gold and the miners and silver, you need to factor that into your overall asset allocation within your portfolio. Know how much of the money, depending if you have this one, what percent of that is, 5.4, 5.5%. Of whatever you have in this is in gold, silver, and things like that. All right, so what are we looking at from a charting perspective? A nice clean downtrend line, just starting to crack above it. I'd like to see it in the rear view mirror, and there's also price resistance here about 1450, and that's about where we're at right now. So this story of this one, this is the benefit of the doubt line, is this resistance right here. You have the downtrend line. If we can put that in the rearview mirror, bullish. These are your next swing targets or trend targets, 1650 and then about 1870 or so right there. And if it takes that out, I believe that will be smooth sailing. That would be very bullish. It would, again, we would have taken out the bear market downtrend line and these previous reaction lows. But remember, this one's chock full of energy, a lot of oil in it, and I don't know. I have mixed thoughts on oil longer term, so I'm not a big fan of this one. I like, if you want just a one size fits all, this would probably be my favorite, GCC. That's the Wisdom Tree Continuous Commodity Index Fund. Why do I like that one? It's pretty well rounded. These are the most recent updates right here, so forget about that. These are older I just left those on. I updated this today. I'm going to read off for you. Precious metals is 24.66%. And of that, you have platinum, silver, and gold. Energy makes up 22.81%. You have gasoline, diesel, all kinds of West Texas Intermediate crude, Brent crude, and all that good stuff. So there's your energy exposure. Industrial metals make up about 21.59. So this one has a nice exposure, unlike most of these, to these industrial metals: nickel, zinc, aluminum, copper. The agricultural component, the grains component, I should say, of agricultural commodities is about 19.4%. And so you have wheat, soybeans, soybean meal, corn. So pretty well-rounded stuff here. And then you have the softs, which are cotton, cocoa, and coffee, and sugar. And that's about 6.7%. And then livestock, feeder cattle, lean hogs, and live cattle. So again, this one is very well diversified, and I like the fact that it's not too top heavy. It does have about close to 23% in energy, but again, a lot of the things that I'm very bullish on, like the agriculture commodities. And going back to that long-term chart right here, there it is. And I want to point this out. Here we are right now at resistance, roughly about 2075. The price is at 21 right now, but close enough. And that's these reaction highs right here, reaction low. But we're clearly above the primary bear market downtrend line. That was a top back in 2010 right here, late 2010, early 2011. And you can see we've been stair-stepping lower. Again, this is a clear downtrend. Does not take an expert in technical analysis to see that this ETF and this index has been in a bear market until recently. But what makes me say, or what helps me support the case that we're in early stage bull market action, is the fact that we've taken out these major reaction highs. There was a reaction high, the previous reaction high above that, distinct reaction high was right there. We had one there, we had one there, and all those are taken out. We're testing this one right now. We're a little bit above it, but we've clearly taken out these key reaction highs right there. And the downtrend line, like that, like I said right there, that's bullish. So I think if we can power up a little bit more, and there'll be corrections along the way, and here's an uptrend line in which to trade. We might get a pretty sizable correction when that uptrend line gets taken out, and if so, then I'll be looking for pullbacks to support to add back or increase some long-term exposure to the to this particular ETF. All right, now we're going to rifle through some of the other niche ETFs, and that's DBA. This one I've been very bullish on for a while, and said back then, when I was highlighting a lot of ag commodities over the last year or so, said if you want a one-size-fits-all on agricultural commodities, in other words, you don't want any oil, industrial metals, precious metals, none of that stuff, just ag commodities, this is the one for you. It's very well diversified. I haven't updated this one in a while, but it doesn't change much. Live cattle, soybeans, sugar, corn, cocoa, wheat, coffee, hogs, cattle, and cotton. So that's it. You got them, just about all of them there. And it's been a constructive chart. Divergent low here on the weekly, downtrend line taken out, and this thing just continues to move up steadily. And these are other longer term targets here. Next one up, 1839, 1957. And again, it's starting to, these ag commodities, particularly a lot of the individual, have taken out some of these previous reaction highs, and as well as downtrend lines, which help support the case. This is early bull market action. Even if we get corrections, there will be corrections along the way, but this is what I'm looking for in the coming years here. All right, next one up, Moo. This one's a little different. This is not a direct play on agricultural commodities. It's an indirect play. These are agribusiness companies. What does that mean? Well, companies like John Deere, making the tractors and stuff, farm equipment, Archer, Daniels, Midland, Tyson, chicken, and all the other, food products, things like that. So you get the point. You have Mosaic, big fertilizer company, stuff like that. So again, there's a way to play the agricultural arena. I'm sorry, the commodities arena, the agricultural commodities arena via agribusiness. Companies that then benefit from rising commodity prices or agricultural prices. All right. Next up would be, and it's getting a little stretched, by the way, and that will most likely, this is going to have a high correlation to the stock market for the reasons I just said. You have individual stocks, not actual commodities. So keep that in mind on this one, and it's getting really frothy, really stretched here. And there's your trend line to watch. Moving on, JJS. This is one of the, tracks the soft commodities. It hasn't been around that long, and when you look at these little, speckly little dot type candlesticks, that's because it's a very thinly traded ETN. This one is. But if you want exposure to just say the coffee, cotton, and sugar, this is your ETN right there. So weekly chart doesn't go back very far, so I can't render an opinion on that because we don't have enough trading history on it. Wheat, gotta love wheat. I mean, look at that beautiful downtrend line. This one started trading back here in 2011, and wheat, like so many other commodities, has been in a clear, unmistakable bear market until recently. Took out your downtrend line right here, back tested it, and moving higher since. And what happened is if you look closely, we took out some major reaction highs right here, and this was a trading range. Remember, this was support, 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 support. Support once broken, pretty impulsive sell-off, set up this trading range, which I was referring to back then for the last couple of years as most likely a basing pattern, and we broke out to the top. We back tested it after breaking out, and we're moving higher. Nothing but bullish. As long as wheat, WEAT is the symbol for the ETN, stays above that 6-ish level, nothing but bullish. If it breaks below that, that's not good because you're back into that, what appeared to be a basing pattern, and you broke support as well. So those are the longer term levels to watch. Next target's up here about $7 and then about $8.50. Again, long term targets in wheat, and those aren't final targets. They're just, we'll have to see if and when we get here, how do things look. Are we going to go higher from there? Which, if we're in a new bull market, most likely that'll be the case. Corn, wow, just, look at this run. You have a downtrend line taken out. You had an alternative trend line there. Positive divergence on the weekly chart, everything I like to see, oversold. And boom, this run has been strong, unstoppable, shrugging off divergences on the shorter term time frames, which is another trait of early bull market action when you get these negative divergences, divergent highs, and the corrections are either none at all or maybe just a little consolidation or mild pullback, and that's what it's been in corn. Corn, again, tracked by this ETN, that's up 70% just in the, what is that? What period of time is that? In the last 8 months, a 70% run in corn. And Powell's telling us there's no inflation. This is going to hit everybody's pocketbooks hard. This is, you go to the grocery store, I don't have to tell you, corn and wheat, things like that. That's directly going to hit not only food prices you consume, but think about farmers feeding their livestock and all that. So therefore, beef prices go up because the grains are going up that they have to feed the cattle and the pigs, and it's just, it's a clear breakout and taking out these previous highs as well. Both those two previous reaction highs are taken out. That'll be a big one if taken out. There was a consolidation or a trading range right there, and that's about $20, which is the next target. Break above that should just seal the deal and and say, hey, we're in a new bull market. Now, again, corrections along the way, and I'll continue to update these and maybe buy back in at a better price level on the next correction. Soybeans, another one that's just ripped up 65-66% just the last 8 months or so. Nice looking chart, downtrend line, bullish divergence right there, and a breakout, and this thing's not even looking back. Look at the corrections just getting bought up. That's not a bear market rally. That is early stage bull market price action right there. However, this one's at resistance. You don't want to, if you don't already have a position, you probably don't want to load up on soybeans right now. It's a pretty big resistance level right here on the weekly chart, and we are overbought. Again, that might not stop it. If you do go into it, if you're just going to scale into any of these positions, you just say, Randy, I don't want to time it. I just want to get in commodities. Then yeah, just don't get married to it. Buy it, set a stop, just in case there's a deeper than expected correction. JJG, this is a one-size-fits-all for your grains. If you don't want to, I just covered corn, wheat, and soybeans. Well, guess what? This one tracks them all. And it was highlighted back here on this bullish falling wedge in a back test. We had a breakout of the bullish falling wedge, back test, and this hasn't looked back. So corn, soybeans, and wheat and JJG getting a little frothy. Potential divergences. Again, these divergences haven't stopped this thing. You had a little divergent high right here, and you had a little correction, but boy, they bought it right back up just as soon as that correction started to get going. But again, now you're getting even more overbought, bigger divergent highs. So at this point in time, the near-term trend is up in these things, and you can certainly trade that trend. But just keep in mind it's getting a little frothy. Pullback here, if we get a pullback anytime soon, 57.38 looks like a pretty decent support level. Might be worth stepping in if the charts confirm at the time. COW, livestock ETNs, cattle and pigs in this one. And just again, it's been a broad-based rally in commodities. Quite often you see the grains going up and cattle and hogs going down because of that input cost to the farmers to feed them. But in this case, people are buying anything, commodity related because that is, again, what I believe to be the inflation trade. JO is coffee. This is how did I get over to the daily charts? Oh yeah, there wasn't a long-term history on cow. Some of these you have to go back to the older versions. A lot of the iPath, this company here, they retired or rolled out newer versions of these. So JO is the current one you want to trade. It's more liquid. But back in the day, I've been trading coffee via the old JO for years. If you go on the site and you see something back before 2018, it would be this one. The old JO, they changed the symbol to JJOFF, or I did that wrong. No, that's right. JJOFF. And so by doing this, we can go back to a longer term chart because that one traded. Again, it's the same company. They did just something with the internals of how they run that ETN, but it's the exact same company also tracking coffee futures, and it gives us a longer term perspective on coffee. So, there's been some great swing trades. Coffee is a great trading vehicle. Back here, big divergent low, everything I like to see for trend trades. Explosive rally right there, ended with a divergent high, followed by a correction, ended with a divergent low, rally right into resistance, and then boom. And again, this illustrates the overall bear market. Those were bear market rallies, but most recently we put in this divergent low right here, positive divergence, and we took out this downtrend line right here, primary downtrend line, breakout, back test 1, back test 2, and moving higher. Needs to clear this area here. And this is what coffee needs to do, is kind of break out right above this what I believe to be a basing pattern like I showed you in some of the others. And if so, then that's going to set the next uptrend for coffee. So I think there's a lot of upside potential on coffee. And again, I have to use that for long term. This is JO, more liquidity now than JJOFF. Cane is sugar. We're going to go back to the weekly charts. There it is. Positive divergence has been building for a long time. Off the bottom, sugar's been running pretty hard. Coming up to resistance now. It's about a 64% gain since earlier in 2020, right about early May. And we're at that $8-ish resistance right there. So we could get a correction here. We're overbought. And again, that's just a long-term outlook. The other one is SGG, but then to go back in time, that's another iPath one, so they retired it. This was its predecessor. It still trades, but again, you want to go with SGG now, more liquidity. SGGFF will just paint the longer-term picture, and this shows you we are at resistance as well with a primary downtrend line there. positive divergence. So I do think we break out. It's just a matter of, do we get rejected off there, come back down, and then break out, or do we break out now? Hard to say, but I can say that when we do, if we clearly break this level, and I'll need to verify that with sugar futures as well. Keep that in mind. Sometimes these ETNs do a pretty darn good job of tracking the futures, and if that's the only trading vehicle you have available to you, if you don't trade futures, so that's your only option. Go ahead and trade them. Otherwise, I like the futures contracts, and that is SB is the futures, sugar futures. I think I just had a trade on that recently on the site. Next up would be cocoa, NIB. Here's cocoa. Cocoa, I've highlighted in the last couple of years several long trading opportunities, swing or trend trades on pullbacks to this uptrend line. So cocoa's been in an uptrend, and that was the last time it was highlighted as a objective long entry on that trend line, and you got a nice trade off there. Needs to take out this downtrend line, so that forms a large symmetrical triangle pattern, and just above that, around 35, we have a pretty big resistance level. So that is what we need to see, a breakout here for the longer term bullish case of cocoa, and that'll take us up there at about 44 on NIB right there. That'd be my trend target. With a little stop a couple stops along the way, probably right about here, but again, I'll just hold that out for long-term target about 44.39 or so. BAL, cotton, you can go to BAL or just type in cotton, and BALTF, that's the old one there. Doesn't really look like much, so I'm going to move on. Don't see a lot in that chart worth pointing out. Wood, of all the ones I've covered so far, those hold actual commodities except for the MOO that I covered, the agribusiness ETF. This is wooden cut. To the best of my knowledge, and maybe there'll be one soon, or maybe they just recently rolled out one, but to the best of my knowledge, we don't have an ETN or an ETF that directly tracks lumber prices. This one tracks the timber and forestry index companies, that produce that. They're in an uptrend because lumber prices are. There's some fundamental things that are going on as well. Carbon credits that these lumber companies are getting to not cut trees down. It's a racket. They're getting paid, to not cut trees down, but then they're keeping that inventory, which one day they will cut down. Taxpayer dollars, and so it's really a strong fundamental. A story or support right there for these. But that I suspect that'll change. Lumber prices are going out of control, and I think the government's going to step in soon and force them to up production. And I had a sell signal 2 days ago on lumber futures, and I'll get to that one if time permitting. I think what I'm going to do is, because I've got a few more of these ETFs to do, I'm going to stick with the long-term charts here. And depending on what time I get back from my second appointment today, I'll either do a follow-up video with the near-term charts, the daily charts that I talked about doing earlier, and that way I can give you some precise entry points, exit points, targets, near-term stuff, and I'll either do that later today or tomorrow. So there's wood, and then its counterpart cut. That's just a different company. You can see just strong runs in these lumber stocks here. And I'll get to, again, lumber futures when I do the next update. USO, oil. So this is why those commodity ETNs have underperformed the ones that were very heavy in energy, because oil has been in a vicious bear market for years now. And oil, you can see, unlike the other ag commodities that I've been more bullish on, is still clearly in a bear market, well below the previous reaction highs right there. So maybe one day we get this, but until then, this is bear market action, and that's why you might not want to overweight oil for your long-term trend trades, at least not at this point in time. This is just another OILK. It's a K1 free. A lot of people don't like the K1s that the ETNs kick out, and so ProShares came up with this K1 free crude oil ETF. It's an ETF, not an ETN, so you don't have the K1s to deal with. UGA, unleaded gasoline. I'll just do an update on the daily because I pointed out this breakdown, put a sell signal on unleaded gas recently right here when we broke down, and I gave a target of 27.20, which I still maintain, still think it's going to be hit, just like crude oil, which recently broke down. I think we're going to get another leg down. So far, this is just a kickback to resistance at 32.61 level. You can see it there. We just need to come in and take out these recent lows to open the door for that leg down to the next target there, or the first target at 27.20. All right, just a few more and we will wrap this up. UNG, we've had a lot of trades. Natural gas is just an excellent trading vehicle. Very volatile. You don't need a very big position size because the moves are so big that if you get the call right on a long, you're going to make usually well into double digits on those swing trades. And likewise, if it goes the wrong way on you, it's going to go down pretty hard. So you need to use wider stops, and for the wider stops, you're going to have much higher price targets in percentage terms, and therefore you just take a little bit smaller position size. And UNG from a weekly chart, nice big positive divergence right here. This is natural gas, just like crude oil. It's been in a downtrend, bear market, but this one has a clear downtrend line, which if taken out should bring us up. You have a reaction high right there, but my next target is about 1488. And then you can see all the way up here 2222. And so if natural gas starts a new bull market, I'm more bullish on natural gas than I am on crude. And so there's some long-term targets for you there. KOL, looks like they retired this one. That's the coal stock sector ETF I gave you guys a few months back. A lot of coal stock trade ideas. Those things exploded off those lows. Again, that maybe is an update for another video. And then last but not least, the metals. We have gold. Again, I'm on a weekly time frame and made the case here. We turn all the lines off. This was our last bull market in gold right there. Series of higher highs and higher lows. Ended back in 2011. And then we had a bear market, which ended back in December of 2015 right there. Then we have and are still in what I believe to be a bull market. And I made the case recently that I think that was where I exited a lot of the longs, because that was major resistance on gold and silver. And this was what I believe to be a bull market correction with the next leg up to come soon. And that's the longer term outlook on gold. PALL, palladium. There's an uptrend line to watch, starting to get some divergence here. Palladium has outperformed gold by a good margin, and I think it's getting ahead of itself, so probably a big correction coming. But there's your primary uptrend line on the weekly chart. PPLT, platinum, strong move recently off the lows. Again, it's this common theme of these, the inflation trade, these industrial metals as well. Everything, all things commodities, oil, you name it, all of it. Explosive moves off the bottom. With this super easy Fed keeping the pedal to the metal on low interest rates, and we've had very low rates for a while, and commodities were still in a bear market. What's different now, again, is it's in the charts, and that's where Powell and I can differ all day. He acknowledges this move up in commodities, but he thinks it's just transitory, or will pass, and then we're going to go back down in commodity prices. I think we'll have corrections, but again, and if we do that, if we come down, we start smashing down, take out all these previous reaction highs, all these support levels, we move back down here, and again, I'm just picking this one example, then Powell will be right and I'll be wrong, and this maybe was just a quirky bear market rally. Again, everything's quirky with what the Fed's done when they went nuclear back here in March of 2020. It certainly distorted a lot of technicals and caused a lot of things to explode off there. But again, as long as a case can be made that this is early bull market action, that's how I'm going to trade these things. Copper. You remember the last housing bubble when copper was just flying? Like everything else, and that was a big thing. I mean, down here in South Florida, they were going to people's houses, and or especially the empty houses, there were a ton of those, and stealing the air conditioning compressors, or breaking into abandoned homes to rip the copper out of the walls. Well, look, this is inflationary. I've talked about lumber prices just screaming higher, and the cost that it's added on to new home construction is crazy, highly inflationary. And here's copper. There's another big component in home building and everything else. and just shooting up. And again, the case can be made. We were in a bear market, but we took out that major reaction high right there. We're well above it right now. Now, copper's getting stretched. Sooner or later, we'll get a correction. But as of now, these things are in strong uptrends. JJC is just another copper ETN. LD is lead. JJU is aluminum. A lot of these haven't been around very long, as I'm getting now, and that's the last one. We'll wrap the video up here. But again, just a strong rally. Aluminum up about 58% since last May. All right, I'm going to wrap it up here because of the length of the video, and then I will, as I said, cover the daily charts, the near-term charts on some of these, and see which ones are actionable trade ideas now, or maybe some levels to watch, pullback levels, support levels, which to set stop loss orders. Again, try to zoom in on the near-term technicals. This was just the longer-term, bigger picture for the just about all the commodities I track. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.